And we are live. All right, we're going to talk about, there we go. Barely, there's a big delay on YouTube. All right, let's get into this. So we got the, obviously we have the attacks, right? But I think we need to look past this, okay? This is a game of patience at this point. We've seen every single time we have some type of little disruption, where whether it's war, it's a buy the dip opportunity. And I think that's what we're looking at. If you are in the chat, go ahead and let me know how the audio is working, if it's clean, if it's clear, if I need to make any adjustments. I'd appreciate it. Okay. So yeah, let's go ahead and take a look at this. Now we're looking at these 4 macro indicators really quick. Number one, we talk about interest rates staying up below that 4 or 5 level to remain stable to keep this bull market going. And the other day we had an inflation report and we scraped against 4 or 5 and we came right down. It was only today or last night, after the the attacks, which implicates higher oil prices, that we spiked back up. So really, is this something to really panic about, right? Are we going all the way back down to retest the lows? Is this it's a buy the dip? It's a buy the dip opportunity. That is usually what we see here. Now we have the VIX, okay, finally getting to 20. We finally popped. Remember the last stream we talked about VIX getting back to 20, somewhere in that level. We got above it. What do we hit? 21, 22. Okay, great. Let me make sure that audio is working. Should be. Okay, perfect. Yeah, we're working. We're good. So we're gonna continue here. Now, again, I'm telling you guys, this oil spike, maybe give it a week, maybe 2 weeks. Either way, this is going to be the buy the dip opportunity for a lot of the market. Okay, so VIX next level, if it gets bad, is probably around 27. That's usually it. One standard deviation. The normal range for the VIX when it spikes is going to be that 27 range. 20 is the average. So we're looking at that down here. And we got above that. Who knows? We might trickle up a little more. The move index is also bond volatility. And that's the key. Is there, enough funding for the government for these tax cuts? All right. So on the bottom, we're talking about the oil spike here. And it's really all about oil. So I'm going to throw the chart of oil. Let's go ahead and take a look at this. Okay, so the reason this is even a scare at all, this whole panic, is really just about oil prices. Why? Because it's gonna influence inflation. Oil is one of the biggest inputs, and this could be it. This could be the last spike, right? It might be it. We might be done with from here or not. Okay, let's go to the weekly chart, see a little more. Okay. All right. So Trump is panicking because of this. Trump is going to panic. We're right into the, the downside. I'm sorry, the upside of the range for oil prices. You can see that we're pretty clear. So this might be it. That might have been the worst of the worst. Maybe this war escalates, but the truth is, hey, Iran doesn't stand a chance. I don't think anybody's really taking it too serious, other than just having a little bit of precaution. Let's roll into energy. Energy might just roll right back over. The reason why Trump might panic is he now, the is it the SLR? We don't really have many reserves. We already exhausted a lot of them. So he's going to have to depend now on Saudi Arabia and a lot of the OPEC countries to continue production, right? Continue that production to keep these prices suppressed. You might have to give a little more concessions now. Who knows what that'll look like? There's a lot of bills and a lot of policies getting passed at the moment. Either way, this is the level we want to look at. It's 80. We got up to about 77. So above 80, if we make some kind of price action where, we start holding above, let's see if I can get this thing. If we get any kind of price action that holds above 80, then I might be worried, right? Something like this, boom, boom, boom. And then we start to run higher. Then I'll be worried. And as far as the great reset, right? This giant, this new era of technology, this new era of politics, this is going to delay the great reset. Trump is trying to do what? Get interest rates lower, move manufacturing to the US, restart a whole lot of stuff. But financially, when we're talking about economics, he needs interest rates lower. So oil spiking is a threat, because now the bond market is like, well, now we're going to have higher prices. And usually if it gets too high, we're going into recession, right? This is usually what causes recession. But I don't think it's going to be that bad, as far as I see right now, it's just Iran, and it's Iran. Now, if you have China step in or Russia, that's a problem. Russia's a much bigger force than Iran. So as long as we stay below this level, I think we're still intact for the bull market. Looks like we're going to have a second. It looks like the Fed is going to have to push rate cuts out further, even though they're not even talking about them. They might get pushed out even further. So keep an eye on oil. That's really the domino that takes this whole thesis apart. The reason why Trump's panicking, it delays, interest rates. But we have a whole lot of other stuff going on either way. Let's look at the dollar. Did the dollar spike? It really didn't spike. And this is weird. Usually when you have geopolitical risk, the dollar is a safe haven. You're not getting that. You're getting it maybe in gold. I don't think the market's freaking out that bad from this. Could it escalate? Sure. But we've already seen this. The market's getting hit with a lot. So we're not getting dollars going up. If anything, it's rates went up a little bit. Okay, let's go to the daily for this one. We were just trying to look at the oil price. There we go. So rates are kind of rolling over. We need them below 4.5. We need to stay below that level. So far, so good. This might be it. So I'm not too concerned. Really, just look at the VIX. I think it's by the dip opportunity. If we continue to surge, we might be looking at 26, 27, somewhere around there. It's going to be a buy the dip. We're heading into the summer. A lot of these bills need to get passed. We're going to talk about those bills. We're going to look at the technicals. So we talked about that 4.5 rate risk. What does that mean? Well, it's going to delay the bull market breakout for crypto, for stocks. It's going to delay these cuts. And at the same time, we're waiting for the Genius Act and the tax bill to get passed. Why is the Genius Act so important? We're going to go over that, right? I'm going to talk a little bit about that. But before we do that, let's look at where the S&P is at. We're going to just do technicals for SPY. We could do the Qs. And I want to just see where we might be due for a rollover, a little pullback here. So let's take a look at that. And then we'll dive into the Genius Act, kind of see where we are in the macro. Also, a couple hedges, couple ways to, where if we do drag sideways for the rest of the year, then what are we looking at? We're looking at, hey, maybe you just hold cash, you wait for the dip, or you roll into some equity income. Who knows, right? So looking at S&P, again, we're still bullish as long as we're above this level, 55, 575. I think we're in good shape. And for the bull market, the question is, does it take us longer to break out, right? Because we had a very good, we're going to hit the economy also. We had a very good inflation report. Now, when we look at the RSI, I'm going to pull it up here. I'm sorry, not RSI, MACD. This is our momentum for the S&P. This is what a lot of people are looking at, is that our momentum trend is starting to roll over. Okay, we saw this in the early 90s. It recovered. Every other time it did not recover. Every other time it rolled over. And we basically had a big correction for stocks, or we had a sideways, we just had sideways movement. We could not break out to new highs. So we could recover. We'll see. We're still early. This is the monthly trend. We're looking at the monthly trend, but check out your MACD. Let's put that back. We're just looking at the MACD there, and it's crossing beneath. We want to see that thing recover. You can also look at the dials down here. As long as we go dark red, if it gets dark red, then yes, we're starting to roll over. But that pink is sort of like we're bumping higher, right? In the inside, the internals of it. RSI can always trickle up here. I'm not too worried about it. We're not going to look at anything else. No Bollinger Bands, just that. Let's go to the weekly charts. I think they look a little better. Here we go. Yeah, weekly charts. You can see the weekly's bullish. We just crossed over when we broke above this little cup and handle or reverse, whatever you want to call it. It was a technical level. It's 570. We broke above that. We're lifting. I still think we're in the bullish trend. Okay. Now there's a lot of stock. We're going to go over market breadth too. I want you guys to see the risk appetite of the market. I think that's down there. That's in the show notes. We're going to go over that too. But technically, we're looking sound. Let me erase this really quick so we can actually, boom. Some of you guys are just listening, so I'll try to, give you a little breakdown audibly. Okay, so weekly trend, RSI is still climbing. We're above that 50% on RSI relative strength, meaning there's still more buyers in this market. Okay, on the weekly chart. MACD again, like I said, crossing over to momentum. It looks good. I love that technical look. I want to throw on the Bollinger Bands. Let's take this off. We're above the midpoint of the Bollinger Band, so we're in. Volatility is picking up to the upside, right? Bollinger Bands measure a lot of vol. We had a big vol pickup to the downside. We cross above the midpoint. we're trying to make new all-time highs. We're pretty close. We're not there yet. If we look at the EMAs, are we above it? Yes, we are. This is what EMA is. This might be the 12 or okay, I got the 12 week. So that's basically we're looking at a quarter of data. So if we look at the last quarter, and this is probably because we had a great earnings report. I see the comment. Let me get that comment out there. What up, Tanner? What stocks are at risk if Israel-Iran war heats up? Okay, I'm going to keep that on there. Let's talk about that. So S&P is good. What stocks are at risk? I would say the stocks who actually need to use oil are at risk. The ones producing energy, they might get a bump up. I don't know if it really lasts, but the S&P is still in good shape. QQQ. Let's look at some of the indices before we go into individuals. The Q's almost made new highs. Really look good. Same thing with the RSI and the technicals. They look good. Let's hit SPY daily. I know I'm going quick here. Let's go to the daily really quick so we can see if there's any divergence. The only bearish chart I see is the monthly chart. Honestly, the daily looks weak too. It looks like we're going to roll over, right? Look at that MACD rolling over. This is a delayed chart, obviously, but RSI kind of double topped here. We're probably going to be chopping around. That's what it feels like. We're waiting for the Genius Act, the tax bill to make its way through Congress a little further. I think we're stuck at the Senate. Excuse me, I'm a little under the weather there. But anyways, yeah, we're holding on to that 12-week when it comes, our 12-day EMA. Not too worried about that. Bollinger Band, we're still above. We're still in bullish territory. We're still holding bullish momentum. Let's do a little VWAP volume profile. Okay, see where we're at with the SPYs. Then we'll hit those. We'll answer your questions there. I just want to make sure we can see everything from the very low. Where we at? Here's where I'm thinking we probably range for SPY. Okay, 587 ish, whatever, to about 605. This is the volume. It's like VWAP, but profile from that area. If we do the actual VWAP, anchored VWAP, see what we get. Oh, that's way down there. So this one's definitely different. Okay. Nope, don't want to see that. How about from the last push higher? That seems a little better. Either way, we're still in bullish territory, right? We're not in a bear market yet, but we still have time to go. I always said I think we're going to get the biggest correction by the end of June, and then we'll start to recover. Looks like we're starting to play out there, even though we've gone higher than I thought. I thought we would pull back a little. I didn't think we'd go this high. So, okay, what stocks are at risk? We're going to go over that too. TLT looks like trash, right? It's just trashy. We need people to come in and buy these bonds. That's what Trump is hoping for, the Fed to flip. Powell's not budging, especially with the oil spike. We have a meeting soon. And what's going to happen now that you have to factor in a spike in oil, inflation pressure picking back up? I don't think we have real pressure. It's just the trend is, starting to turn up for inflation. We're going to look at that trend in a minute. Where are we at with nat gas? Not really going anywhere. So we're not getting pressure from nat gas. It's just oil. All commodities are trying to pick up. Gold isn't really an economy. This is geopolitical risk. This is the Fed's going to cut, and there's some debt issues with gold. It's not necessarily inflation indicator. Copper is there's no inflation. Okay, there's really no inflation. It's just going to delay this reset, and the reset is Powell cuts and interest rates get cut. I'm sorry, the bond market starts to bid up to get rates down. That's the reset. Outside of economics, the financial reset is how do we get rates lower? How do we get them lower? We're getting no signs of triple B spreads, which is this is real economic risk. These are yields. I'm sorry, these aren't yields. These are investors really betting, is the economy going into recession? We're not seeing anything. If it spikes, we're in trouble. So we're still low. Like, it's nothing too bad. Move index, bond volatility is low. We're not seeing real risk. I think we're gonna just go right through this whole. They have to talk about something on the news, right? They got to talk about something. But the truth is, from my perspective, obviously, I don't think this is a big deal. Okay, we didn't even close oil higher. We didn't really close higher. This is attacking nuclear facilities. Is Iran really a big threat? What are they going to do? I don't think so. I'm not too worried about that. So who's at risk here? And I know you might be looking at a trade here, Tanner. what stocks are at risk in Iran war. Let's go to industrials. I think industrials feed a lot off of, oil prices. So Deere, Caterpillar, I don't really see nothing too bad. I mean, I didn't really do the research on who gets hit. Just, instinctually, I know some of these industrials are going to suffer because their costs are so high. They're very capital intensive. For instance, software, finance, not really. Not going to do much to finance software. Bullish on that. In the short term, though, if we look at who else we got here, well, defense companies are doing okay. I do want to point out there's a drone company for drones that's probably, I think it's breaking out right now. It is, where is it at? Should be in here. Some of these drone companies, they might be doing pretty well. RCAT, here we go. This is a micro cap stock, or no, it's a small cap. I think it's 750 million. So this thing can really move. It's starting to break out. Just to signal it, we have a nice trend. You see it broke out a long-term trend. We're starting to lift. It did get a little overheated, not really that bad, but I think it's getting ready to blow up. So keep your eye on RCAT, Red Cat Holdings. Okay, Kratos started to bid up, so it's easier to see the ones who are going to bid up from this. I don't think it's going to be an all-out war. Like it should die down. I could be wrong, but that's my instincts at the moment. Boeing, let's see, they're not even really going up much either. I really don't think the market's reacting too much. I think we're just overheated in a lot of areas. We're very overheated, not too worried about it. Oil producers, we can hit those too. But getting back to it, Genius Act, tax bill, SLR requirements. Now, if we kind of cover the economy, let's take a look really quick before we hit anything at the economy. You guys stay here because I'm trying to get the narrative in your head that the economy is fine. Let's look at retail sales. Okay, this is probably your 40% of retail sales are consumer spending. The other ones are business sales, and it's crossed core inflation, right? Is this core? No, that's just regular inflation. That's not core. Let's just do regular CPI. This is just CPI. Just take a look. Just be patient here. Be patient. Now, who are you patient with? Of course, I'm going to say risk assets, but just trying to get in your head, the economy is actually looking better. This is a really good environment. It's all about the damn policies. As I keep saying, Trump knows it. And he's like, Powell, cut rates. Even though Powell, it's irrelevant. It's the bond market that you need, right? So retail sales climbing. That's why Powell's not cutting. The economy is still strong while CPI continues to trend lower. And yes, it bumped up a little bit, but it was still below expectations. All inflation, and we can go over that again. Most inflation indicators are pointing lower, guys. This is a perfect environment for risk assets. The rally is coming. I believe we hit all-time highs if this rolls over with oil in sometime in July, right? I think end of June is the pain's over again. We had a strong rally from April, May, June. We had a very strong rally in especially risk assets. And I think it's just time to roll over. So yeah, I wanted to look at that. Now let's look at the internals really quick. Check this out. And I know we're going to be confirmed. Okay, finally got the data in. How many stocks are above the 200-day moving average? We're looking at internals. We want to see how healthy is this uptrend. We're not just going to roll over, right? We looked at the technicals. Now we're looking at the internals. How many stocks are going up? We're getting stuck at the 50% mark. And that's makes sense. Once we pass halfway, you're getting half of the market, S&P 500 at least, trending above their 200-day moving average, which is a key trend indicator. We're not there yet, but we've hit it like 3 times. We're trying to get past it. We're almost there. And I think it's going to come down to the tax bill getting passed a little further. Interest rates are going to be tricky because there's so much going on, but the tax bill is going to be a big catalyst. So you have that. The other day I pointed this out. How many stocks are making new 3-month highs? We hit the highest levels. Okay, this was Monday. So last Monday, or was it this Monday? No, this Monday. We hit the highest levels since November 27th, which was this was what, shortly after Trump got inaugurated, I believe. So we're hitting high levels. Stocks are bidding up. This market has a lot of risk. If we look at some of the risk assets too, or our risk appetite, this is consumer discretionary. So a lot of the cyclical stocks going higher. Does it look up? Oh, my bad. What am I, drunk? Okay. So they're getting there. We're trending up. The trend looks really good. Crypto struggling to get above S&P. This is versus S&P, but you see the trend is up. We need one more catalyst. I think it's the Genius Act. IPOs going up. You know, it's really interesting how I know risk is up. If we look at messed up again, micro caps, I believe, are these micro caps or these? Yeah, micro caps versus small caps. See how they're playing catch up. Okay, so a bunch of tiny not like almost startup, very growth phase, not earning money. They've been very strong. That strength tells me that there's enough capital to really get this rally going, or it's at least healthy. So okay, done with that. Let's go back to the index. Wanted to point that out. Okay. Now I wanted to talk about, let's look at Bitcoin, BTC USD. If you have something you want to look at, throw it in the chat or whatever. But I wanted to see, crypto always tells us how's the risk appetite. Bitcoin is trying to really consolidate at all-time highs, forming a wedge. Now, I don't want to see it consolidate all the way till September, August. But it should have broke out and it didn't. It didn't hold the breakout. And so we're delayed. We're just delayed a little bit. But again, I think it's all about the Genius Act. Now, stepping over to the Genius Act, okay, what is it? Okay, and I want to read this to you guys. How does this enable, the bull market? Number one, if it gets passed, you're going to get a buyer, and we talk about this all the time, along with SLR requirements, deregulation. You're going to get a buyer for U.S. Treasuries, which is going to lower rates. The Genius Act is a game changer for tokenization for finance, right? It establishes clear rules for stablecoins, allowing the tokenization of treasuries and all real world assets. So this is the huge catalyst for crypto, not necessarily Bitcoin, but it will for Bitcoin no matter what, because it's crypto. But the Genius Act is going to unleash the altcoin rally, right? We've had a lot of rallies in nuclear stocks. Look at Oklo, SMR, robotic stocks like Serve, SERV. I don't know if you guys are familiar with this. This thing exploded, right? Totally exploded. I think we can still see it, right? Okay. Yeah, it exploded, but it's starting to roll over a bit. Is it a buy the dip? Not right now. Not right now. We need it to cool off. We want it to go lower. But Serves is a robotic company, very high risk. I wouldn't buy it at these levels. The breakout was right here. When it gapped up, that one might have been the buy. But my point is, there's a huge risk appetite in markets at the moment. Let's go to the other high betas. Okay, Wolf. Wolf is up from the lows. This is TeraWolf. So we're talking renewable energy, Bitcoin mining, 100%. It's over 100%. This thing's trending higher. Looks good. Oklo, absolutely monster. I hope you guys took advantage of that when it broke out here, May 1st. Boom. Right. Oklo's pulling back. I want to see it come into these, these anchored VWAPs from the lows and from the previous high. So I'm thinking somewhere around the 40s would be a good price. You want to look at the macro, but at least price wise, Oklo in the 40s looks really good. SMR, pretty much the same thing. I mean, that formed a strong flag pattern, broke out. My point is that there is an appetite for risk. Okay. It just comes down to where's the narrative at this moment. And then before that, we had the quantum computing stocks start to make, higher highs. Yeah, they look good. They look good. They look really good. We got SM Serve Robotics. I'm waiting for Symbotic. This is the robots manufacturing stock. Looks pretty good also. Some of the AI. Oh, Tempest AI, another big move, right? That consolidated, came in a VWAP. This is not the VWAP I want to see though. Yep. So in the 50s would be good. In the 50s, but that thing is starting to really wedge. What is this? That thing is really starting to wedge up. That thing is really wedging up there, okay? I know some people are looking at XOM, ExxonMobil. I mean, ExxonMobil has just been in this consolidation phase for like 2 years. So you could probably sell options on it. But I'm not interested in this. This is not going to give you the big gains, right? This is more income based. Does it even sell? What is the dividends? 3.6. So this is an income based stock. If you're trying to grow, you're not really going to get it here. I mean, if you're older and you're a little more mature, your portfolio is bigger. Yeah, maybe. But I think oil is going lower at the end of the day, right? This all depends on the price of energy. And A lot of these stocks are just trying to catch up. Same thing for Chevron. They've been consolidated. Look at that. Just been in consolidation, and they don't move much. They're really big companies. Price of oil is going lower. Now, you know who did bid up, interestingly, today was energy storage. You had Tesla up. You had Fluence. Check this one out. Very small cap stock. This is battery storage technology. Very new. I think 2021 they came out. So very new. And also Enovix Corporation. Just keep your eye there. These are obviously, these probably won't, these are high risk, but they're at least at the top of their game. They're doing the most when it comes to battery technology. They need more liquidity, right? They need the Fed to cut. They need interest rates down. It's very capital intensive, not like software. But semis look good. Let's look at SMH. Do we have another comment? Damn, did I lose it? No, there we go. SMH, yeah, so the semiconductors look good, and I'm looking at AMD right now. Okay, like I said, SLR requirements, when that gets deregulated, this thing is going to explode. We are looking at a bull market forming at the moment. So this is one of the ETFs in the portfolio, the weekly portfolio. I'm about to release the new version pretty soon. It should be done by this weekend, guys. I want to say every Wednesday, and it's going to have a lot of stuff: high risk, high growth ETFs, high beta cyclicals, individual stocks. Where are they at when are they going to be at good prices? And I'll adjust it when I see fit. Also, income generating plays like low yield bonds. Like if you guys are not familiar with low bonds, you want to have that in your portfolio. Low duration bonds, short duration bonds, because when the Fed cuts, those short duration bonds are going to move up a little bit, but it's mostly the income that you're going to get from it. They're going to yield you. They're pretty much dollars yielding you, right? Now, is that what you want right now? Nah, but it's good to put it on your radar. It's good to have that on your radar. It looks like solar stocks are just trash still. Still trash for the solar. These are moving up. So catch the next trend. This trend is going to continue for the next 5 years. It's uranium miners. Look at that. Exploded. Now, it's good to have it. LEU, CCJ. This is a big one too. So uranium miners, these are all nuclear. Oklo, SMR, NNE. Haven't looked at this one. This one still hasn't broken out. I'd have to do some more research to see where they're at. But Oklo and SMR basically are definitely doing good. You know who I forgot to put in here? GE Vernova. Is it GV? I got him somewhere. GE Vernova. What is the ticker? Does anybody know the ticker? GE Vernova, GVO. Damn it. I got it on my Robinhood. Let me check. I needed to add that. Let's see. GE Vernova. Got to get that ticker on here. Yeah. So what are our major concerns? Well, we look. Oh, ELF looks great too. ELF, once it consolidates, I just took off a debit spread that was up like 300, 400%. That thing explode. Okay, GEV. There we go. GEV. I'm going to add this in. GE Vernova. It already took off, but you just want to keep watch of it. Let's go. Let's put it in nuclear. And then you also have CEG, GE Vernova. We're on the weekly chart. Probably needs to pull back. Let's go to the daily. What does it look like on the daily chart? Yeah, it's pulling back. It ran up. But this trend is going to continue, especially with the tax bill, the spending bill, and the deregulation stuff. That's what I'm trying to focus on here, is all the stuff that's going to get deregulated and has a secular tailwind, right? I need to put CEG in here too. This one's pulling back. This is the one that Meta is going to be paying hundreds of billions to create a nuclear facility, right? So you can see the momentum is cooling off, but you're definitely going to want to see this too. Let's add this one on here. And this is a multi-theme too. This is going to be a utility stock. What is GE Vernova? This is electron. Oh, okay, so that's industrials. Cool. All right. Sounds good. So again, back to Bitcoin. Let's go Link USD, or actually Ethereum. Yeah, let's take a look at Ethereum. I think Ethereum is going to outperform Bitcoin at this point now. Let's go ahead and remove some of these drawings. Let's take a look at Ethereum. What are we looking at? And this has really pissed people off. Hasn't performed. Very unfortunate. But again, like I said, that Genius Act, there you go, GEV. GE Vernova looks good. So let's go back to the stable coin. I got some other stuff we're going to take a look at too, as far as like how people are positioned, how institutions are positioned. Here it is. So the Genius Act, high quality tokenized products. Tokenization is coming. Okay. How does the Genius Act take blockchain adoption to the next step? Because that's why I'm looking at Ethereum, because it's not Bitcoin. It's going to be Ethereum. Okay. Weekly chart RSI. Look at that move. It is starting to bottom. ETH has bottomed out. ETH has touched its bottom, according to me, right? I think it's bottomed out. And I think it has a long way to go. I'm going to say, I don't want to give a big price target, but at least it's going to, once you get the Stablecoin Act, I think we're going to hit 5,000. And then we'll see where it goes from there. But it has a lot more juice in it, I think, and people are going to get pissed. It has more juice than Bitcoin. It's going to rally more than Bitcoin, but I don't know how long it rallies. All right. So how does ETH look? Again, momentum wise, it's slowing in the daily chart. It's almost done. I give it 2 more weeks before it catches another leg. It might come back down to 2,000 flat. We'll see. So the Genius Act, again, getting back to, I'm going to keep saying this, keep your eye on it. It might it's supposed to get passed, or I'm sorry, next step, June 17th. So 4 days is the next step for it, from what I've seen. So with the Genius Act, stablecoins become the backbone for tokenized real-world assets, making it possible to settle, collateralize, and transfer everything from property to bonds instantly. Instant deposits, right? Or instant settlement. So this is where we're all moving to. This is why XRP, I don't think XRP looks good. I don't want to crap on XRP, but they don't need XRP. These banks have created their own blockchains, and they're going to be transacting, you know, all their assets on the blockchain, not through XRP. They're going to be using stable coins. You know, you got Circle exploding. So this is the first step for borderless program. Okay, when should Genius Act get passed? 17th. We're looking at Tuesday, June 17th. The bill should be moving to the House of Representatives for further debate. We could see it become law this summer. That's base case. Okay. Now, again, we're looking at Ethereum. That's part of it. I think Chainlink still has the most, and I know it's underperformed. It's disappointed a lot of people, but we're waiting for the Genius Act. Okay. I mean, the technicals look amazing on Chainlink. I love the Chainlink technicals, but this thing just keeps struggling to really break out. Last time it broke out, we went from 10 to went up 200%. Okay. So it is a high beta cyclical, right? It's really going to move, but Chainlink's basically, I think, is going to stand to benefit the most. Because this bill requires reserve transparency. So these banks are going to need a proof of reserves. And that's exactly what Chainlink has. It's the only crypto that has proof of reserves. So real-time audits to make sure that everything is in line, right? And also interoperability. Chainlink is connecting all blockchains together. That's what it does in the crypto industry. Now we're talking public or private industry. So when you attach that to private industry, they're going to have to buy the Chainlink coins, right, in order to generate the service of CCIP. That's a whole nother thing, but also proof of reserves, KYC, right? There's all these rules that go into it. That's what the Senate and the House are debating. How do we verify and put in regulation? Well, they're going to have to use a unified system, and Chainlink's proof of reserve, CCIP, is the leading technology in that as we speak. Verifies reporting on stable coins, blah, 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 cross-chain interoperability. So this is the go-to infrastructure for compliance, transparency, and interoperability between digital assets in this next era. That's what's coming. That's what's coming. I'm just trying to make sure I don't miss anything reading through this. Institutions. Some people think it could go to 50, 100 if big banks, companies start using it. Yeah, I mean, we need the Genius Act to pass, right? That's what we're looking for here for Chainlink. and for a lot of the other cryptos. I think Sui is another leading crypto. Okay, you got Sui, you have Ondo, I believe. And I'm not going to go through all of them. I just want to throw that out. That's as far as I understand, we're looking at that. Okay, any other questions? All right, cool. So we are looking at this. Now check this out too. When it comes to the risk appetite, again, I want to go right back to risk appetite. I'm going to have to switch screens here. Okay, we're going to go to, here we go. This is what I want to look at, this juicy information. Make sure we can see this. All right. So this is a FINRA margin debt. This is how much liquidity or debt that people are using for stocks, right? And it has a very strong correlation over time. You can see these big spikes. When you get the peak of this, that means we're getting a deleveraging in the market. So 2000, big deleveraging. That was probably the most leverage that we had seen in recorded history so far for margin. So you guys know your Robinhood accounts, it says, hey, you want to borrow on margin. When you're in a raging bull market, people start leveraging up because they're like, hey, we're fools. We're going to leverage up. So 2008. Now we didn't even get to the top yet, right? We came up short right during January. It's not over yet. We need to surpass that level or at least get to this level. Do we really need to? No. But if you don't have the Fed easing yet, there is no QE. Rates are still elevated. We're still in a cutting cycle. The tax bill is literally super juice, right, for growth. Trump's tax bill is so big. That's why we're having an issue in the bond market, because he's going to unload. He has to borrow more debt. He needs more buyers. So once we get that, this margin debt is going to explode. We're still in the early stages. And then if we go ahead and move over to, so just keep that in mind, margin debt is still low. The Treasury general account isn't even drained yet. This is, okay, it's coming down. So this is liquidity for, this is going to be liquidity for the economy. As this thing draws down, it's basically money or deposits. I don't want to say deposits, but it's money from the Treasury depositing into the banking sector. So this means when it comes down, the banking sector is getting more deposits. And you see record levels of building for data centers. You see record levels of investment in data centers. So I'm telling you, the macro looks good. It just comes down to nervousness around bills and blah, blah, blah. Now we have a war. The M2 money supply absolutely, climbing higher. We're still at low levels for this. If we look at the absolute level of money growth, you can see it's barely penetrating all-time highs, right? Barely penetrating. And when it goes up, it just goes straight up. This thing is always continuing higher because it's creating more money. Okay. If we just look at the year over year, the momentum indicator, this is where we kind of know when we hit a top in risk assets, at least like crypto, small caps, mid caps, innovation, growth. Well, we're barely above zero. We still need to get to these, 10, this level 10 up here. Let's take off N1. We're not looking at that. So we're climbing higher as far as M2. We have a long way to go. We have, the momentum is still picking up. Don't get distracted by these little, month to month. We're getting distracted. We blew up. We were at all-time highs. We're consolidating. We recovered, trade war deals. The trade war escalation is over. We're in de-escalation now. We're de-escalating, and there's a lot of upside from here. The other thing I want to look at is how fund managers are. Let's see, where is it? How fund managers are positioned. Let's go to fund manager positioning, US stocks. Okay, this is it right here. Fund manager positioning. Okay. And one thing we've learned over time, I've made a lot of videos, when we get to we always get a pullback when we get to the 100%. This is 100%, right? Once we hit 100, you're probably looking for a correction within the next 2 weeks. Okay. We're not even there yet. So we're still climbing. This was the tariff, this was the Trump Liberation Day, the bottom. We basically deleveraged. Now we're leveraging back up. And there's so many investors who really have cash because they're still scared. And they're usually older. A lot of retail, probably you guys are mostly retail, obviously. You guys are buying the dips. This is a very strong, retail. I mean, retail is outdoing a lot of the hedge funds because we can just buy and sell right away. They have to go call their clients. They got to do all this crap. So they're behind. They're behind because they're trying to play this old 60-40 game, 40% bonds, 60%. Nobody gives a damn. You know why? Because now with crypto and with the Fed, basically unlimited QE, the market's going to recover. We're not going to have a financial crisis because we have QE now. We have liquidity. The central bank can now just rip the money supply. Um, Let me make sure. What else are we missing here? Make sure we hit everything. FINRA margin debt. We got that ratio. There's other ways to look at this too. There's a trend one. Let me see if I can find it. Basically shows the trend over time. Let's see, is this one it? Yeah, this is it right here. Okay, this is it. And I don't really like how they have it, but you can see that over time, this is measuring the total margin debt added to the market. I wouldn't get bearish until we hit all-time highs. This kind of seems like a double top, but this is not a stock. This is not a stock. We're sort of deleveraging. We're gonna make new highs. I think we kind of look like here. We're in 2015. We hit a top. We pulled back, and then we got the tax cuts. Literally, right here is where we got tax cuts in 2017. Right, boom, went to all-time highs again. We haven't even got the damn tax cuts yet. We haven't passed any of these bills. I'm telling you, stay patient. This is a long game. Stay patient. There's a lot of catalysts. We are not near a cyclical bull market top. We're just not there yet. I mean, even the ISM is not at a high. Okay, even the ISM is still not there, and that's where crypto at least or a lot of risk assets are usually taking that. Oh, okay. Let's go to economic data. So let's kind of do a little. We'll get back to individual stocks. I do want to get to that, but I want to go over what do we see this week. NFIB business optimism finally pumped higher for the first time in a while. It had been 4 months. We topped in December for optimism. This is small business optimism. Now that inflation's coming down, the cost to run your business is lower. I know everybody's business is different, but this is a lot of lower oil, which kind of sucks the spiking, but it's also, the trade war de-escalation. Now they're getting more clarity on what's going to happen. So that's really good. Small business optimism. You're going to get more money supply, more transactions, more borrowing from banks, more deposits. Okay. We also had, what else did we have? Consumer inflation expectations finally cooled down. I talked about this in a short for the first time since really October. We had been sideways or higher. Now we cooled. Okay. So consumer inflation expectations, and there's so many measurements, but they are cooling down. Core inflation, lower than expected. I'm telling you guys, no inflation, right? No inflation pressures unless we get oil jump to 100. Or 80. 80 is not good. I don't want to see it over 80 for sure. Take a step back, look at core inflation trend. I don't know how many of you guys have looked at this, but once we spike, we're not getting this spike. The economy is not mostly oil as it was in the past. It's just not, right? And also, this was dependent on OPEC. They controlled about 80% of oil supply. Now the US is the biggest supplier, so we're going to keep pumping. We're not going to get another spike in inflation the way we did anytime soon. There would have to be really something crazy to happen. It's not going to happen. That is not going to happen. That's core. Now the inflation rate adding in oil. So this one is with oil. You can see it's also coming down. Let's do the line chart. We're trending lower. Inflation's coming down. This is very positive. Rates actually peaked when we got this. PPI also lower. Now PPI looks a little worse because these are input prices, but it looks like it's going to roll over. It's been climbing a little bit. It's a little leading for CPI, and this might be sticky because of that spike in oil, but we'll see how long that lasts. Okay, so inflation looks good. Blah blah blah. Jobless claims. Let's go to continuing. I know initial spiked a bit. They're kind of high. What does that mean? There's a little nervousness, but I'm not too worried because there's also a catalyst, which is the Fed is going to be more dovish. That's what Trump wants. Trump is looking at Powell and saying, look, if you don't cut, at least turn dovish, at least get a little more dovish, right? Or Besant is saying that. Continuing, this was the issue. Big spike in continuing jobless claims. Wow. Is this thing delayed May 31st? Why haven't we got an update? No, that was before. Okay. That was before. I don't know why that's not updated. Does it really take that long? We should have an update there. But continuing jobless claims, that's going to trigger. That means more people are just not finding jobs. There's a lot of jobs depending on where you're at. Point being is, the Fed has to turn dovish pretty soon. Inflation's falling. Unemployment isn't spiking. There's not a recession risk, but it is slowing. So the Fed is going to turn dovish here in a couple months. I thought they could cut in July, but now with this war, they're probably going to delay again. Trump is pissed. But at least we had Michigan sentiment, finally come up. We had the first, we had a big boost in sentiment, and I'm telling you, this is all about the escalation. If we get the China deal, we're in good shape. So macro looks really good. What do we have next? Retail sales. Retail sales is going to show us where we're at. We see the trend crossing higher for retail sales versus inflation. So we're kind of in a Goldilocks regime where the Fed is trying to ease. The problem is that the bond market is not freaking easing. That's the issue, right? That is the issue there. High yield income. If you guys are interested, you go look at some of these. You can see the ticker in the middle, but check out this yield on some of these. These are going to be good for a while because we're not at the top of the market. So this is a high yield, and I'm only saying this for defense in the future. Put this on your watch list. This is a dividend yield of 12%. Okay, 12%. It's mostly S&P. Make sure you look at how many assets are under management. This one's 3 billion, so it's kind of high risk. But you also have this JP Morgan equity. They're selling options, basically. They're selling a bunch of options, and they're creating yield through options and dividends. This one's 11.5% yield, right? 26 billion under management. That's pretty solid. That's bigger than most ETFs. This is another JP Morgan one. This one's bigger, 40 billion under management, 8% yield, right? I mean, who needs real estate? And I'm just kidding. It's 8% yield though. Dividend yield. This one's 4%. This is dividend. So I just wanted to point that out. You have a lot of yield products. And if you guys wanted short-term government bonds, we always talk about TLT, right? Because this is more of a big mover. TLT is going to be more volatile, but man, it's suppressed. It is so suppressed. You have short-term also, which you're not really betting long on this, but these short-term government bonds, these are 0 to 3 month treasuries. These are the shortest duration treasuries. Oh, you guys can't even see this. My bad. Oh my goodness, my bad. I didn't even switch the screen. All right, there we go. So we got short. Anyways, my whole point was short duration SGov, short duration government bonds, 0 to 3 month treasuries. This is the ETF by iShares. It's going to yield you. It's going to yield you 4%. Right now, the other ones were higher, but there's no movement in these things. These things don't move. Look at the biggest movement. Like the hell, 0.3%. So this is in your portfolio. There's no movement. There's no volatility. The beta is like 0.02 beta, does not move. Basically cash that's going to pay you. Yeah, you could just do a money market account, but I like to see all my stuff next to each other. So you got that. You got other stuff. Anyways, I was just going through a couple products. Let's look at AMD. Let's look at some of these chips. Do some technicals here. What do we have? 48 minutes. We're going to go to an hour. If you have questions, let me know. All right. So what do we know here so far? What have we covered? Really, yes, the oil spike is, I think you got to look past the oil spike. I think we're going to get through it. We don't want to see oil trending above 80. So watch the 80 level. For the most part, inflation is probably going to stay a little sticky now over the next couple months because you're heading into summer. We're already in the summer where people travel a lot. Gas prices are higher. Or not gas prices, demand is higher for oil. Now oil prices are spiking a little bit. This might be the end of it, but I'm not too concerned because there's a lot of there's a lot of supply out there. There's a lot of supply out there, especially if the global economy is still slowing. Commodities are not spiking either. All right. So we have that. Interest rates are the real issue. Can we stay below 4.5? Can we stay below 4.5? What is the next issue? The Genius Act, a buyer for those treasuries and a catalyst for crypto, right? Probably a catalyst for a lot of the market if you get demand for, interest rates going lower. Now I know a lot of people got crushed on AMD, but I want to do a little TA. on AMD because I think you got to look till 2027 if you can find an option, or you could just own a little bit. But for cheap, you can get some debit spreads, maybe go 200, 180, or just a call option, just a leap call on this. It needs to break this level. Are we on the log chart? Let's make sure we're on log. Yeah, we're on log. So we need to break this to really start lifting. We almost got there. Maybe we pull back. 125. We need to get above 125 to really take off. I'm going to say, let's get this back on. Let's go all the way back to the last low and see where the volume profile is. Where do we need to break from? Okay, so we have a big gap here. We should move to 150, 160-ish on the next, on the next bull cycle. We should move up. The last one was from April lows, right? So another one, we go to 160, then we recheck where we at. This is where most of the volume's at, 160. That's where we see, buyers and sellers meet, they battle. So if we bring it in a little closer from the sell-off, what was it? This was all the way back in March of 20. So this is, more than a year ago. Same levels. Let's go to this year. Let's go to January. If we look at the January cycle, we're almost breaking out to that next, level. So maybe 130, get above 130, but it is looking good. So I like AMD. You do a log and, you do like a little log measurement. Let's do a little log, or not log. I'm sorry. Let's do a Fibonacci from this low. Let's be conservative. We'll go to the 1. We should hit about 184. 184, 300 by end of next year. I don't want to say end of. We don't know. We don't really know. But the next couple cycles, we're probably heading to 300 for AMD. especially if we get SMH really break out. Okay. Now, as far as the momentum indicators, you can see MACD on the weekly is starting to cross over. I think we're bottomed out for AMD. That has to be the bottom. We're getting halfway through RSI. That's a really good setup for momentum. And I know we try to get long here and here. Everybody try to keep getting long, but the RSI was falling the entire time. We never had a pivot. So we finally got that pivot in March. We flushed out all the weakness. You finally had the MACD crossover. We're looking at the weekly here also. We go to the daily chart. It looks like we need looks like we're gonna pull back and consolidate a bit, maybe to 107, maybe 100 at the low. I don't want to see us go below 100. I don't want to see it below 100, but I'd like to see us hold 115, at least 115. It looks about right. So I like AMD setup, but for a long play, nothing short term. You just don't know with AMD, especially with all the volatility going on. So I like AMD. ELF was something that we had pointed out also. Why? Because they probably have the cheapest product. It's a defensive growth name. And that just means that there's always a buy for ELF. There's always people buying it. The business is not cyclical, right? There's not like, oh, I made more money, I'm going to go buy more ELF products. Not necessarily. I want to say just females, but let me keep it a little. Whoever's buying makeup, they're going to keep buying it. They don't care. Nobody looks and says, oh, that's ELF product. Oh, you're cheap. Nobody gives a damn. Nobody's looking at that. This should be a really strong stock. I think it breaks all-time highs by the end of the year. A lot of this weakness was from China. Okay, it was a slowdown. So if we get a deal with China, for sure, this thing is headed to all-time highs. I had some it got really overblown though. So I want to see this reset on the daily. I just actually exited today. I got long way back in the bullish divergence. Still looks good on the weekly. You can see the weekly momentum is pointing straight up. We probably slow down a bit. We're heading into overbought territory. So maybe it just keeps going, but I see a lot of let's go ahead and look at the volume. Let's look at volume from the first high. Okay. So yeah, there's a gap here from 135. If you look over the volume profile, you have a volume gap from 135 to 158. So if we get above 135, then I think we shoot up. I just don't think we get there right now. Not yet. What's the next catalyst? I mean, I don't know. Maybe the end of June. Hopefully we get that bill passed. Maybe we get More progress with China. Who knows? So I like ELF. That's another one I'm pointing out here. What else do I like? MSTR. Okay, MicroStrategy. Man, MicroStrategy is a tough one to really know. You're just playing Bitcoin. This is a leveraged Bitcoin play. The RSI is starting to turn up. It's a little quicker than the MACD. Okay. We're gonna go to the date. Let's go with the 4 hour first, really quick. This one's tough. So look at this price action. I've been looking at this for a minute. Is that too? Okay, there we go. So we're holding this gap. I thought this would be it, 360 to 347. We're holding this anchored VWAP also from the lows. This was from the Trump pivot lows. Let me get some water. Goodness, I am dehydrated over here in Phoenix. 120 outside. There we go. All right, we're at 55 minutes. Any more questions, Tanner? All right, so MSTR, same playbook here though, guys. Same playbook. Risk assets are going to do well. There's different themes rolling around. I think robotics theme is going to come on. We're looking at nuclear. Nuclear just played itself out. I think nuclear needs to cool off for a month before we get another leg higher. But the deregulation, we're going to go over financials. Financials also look pretty good. Robinhood, obviously a beast. So you have this descending wedge pattern, our flag. By the way, my technical analysis for beginners, if you are not a technician, $1 right now. Go check it out for $1. Let me show you the let me show you guys, just because we're doing some TA. Let's go to the window. I think this is it. Here we go. This is not the technical one, but just go to this website. The link is in the description. This is investing for beginners. Anybody who wants to learn more or just get involved, like this is $1 right now. This is going to end this weekend, so go ahead and lock it in. There's a bunch of content on here, right? Different asset classes. I'll go over the overview, right? First, why you should be invested. It's all about inflation, right? Compound interest, how to start investing, 5 major asset classes. And I'm going to be adding to this how the stock market works, just looking at stocks, the different sectors, growth stocks, value stocks, cyclical stocks. And I'll be adding, like, there's a mix in here too. There's growth, there's cyclical growth stocks, there's defensive growth. There's all these different mixes. I'm going to be adding that in there. Strategies, I'm putting that in here too. We're getting strategies, diversification, understanding your risk in different asset classes, market caps, 60-40 portfolio, 80-20, high growth, conservative portfolios, just stuff like that. Right now, the TA one, let's see if I can find it. Courses, technical analysis. This one is $1. I'm not even done with it, but that's why I have it for $1. It's just a beta test. Bite-sized videos. These are 5 minutes each, breaking down, breaking down different stuff. Like here we have candlestick basics, right? Basics for candlestick patterns, basic price analysis, just basics. Technical patterns, that gets a little further than basics. All the different technical patterns, how to identify them, and then technical indicators. And I'm going to be adding to this one too. Right now I only have RSI. How does it work? And I'm going to be adding to that. So go check that out. All right, let's get back to it. MSTR. All right, so MicroStrategy is forming this flag pattern. We're really looking at Bitcoin, but when this thing blows up, it really blows up. It just has a crazy bid. It just doesn't stop, and it usually actually front runs Bitcoin. So it's starting to bottom. You can see today, even though today we had the scare where everything sold off, MicroStrategy bottomed 367 and just trended higher for the rest of the day. And this is at the same time where Bitcoin, I believe, is weak. So I like that relative strength of MicroStrategy. It's holding these levels. So keep your eye on MicroStrategy, especially if you don't want to own, regular Bitcoin. Does it have risks? Yes. Go make sure you read the risks of it. But I think they're good. They have so much Bitcoin. It's insane. And now they have all these yield strategies, which I'm skeptical of. I'm 120% yield. I don't know about that. There's got to be something weird about that. Maybe you just buy one share. Either way, MSTR, I like the setup. I like the Bitcoin play. The options can really move, but I would not buy a straight call option because they're so expensive. What I'm doing is debit spread. So I buy a call, and let's say I buy a 650 call. I'm going to sell a call right above that so I can lower the cost. And all I need to do is get to 650, right? Get it to 650. You can get out early and still profit, but by the time you get to expiration, I wouldn't do anything less than 6 months. What do we in June, July, August, September, October, November, December? Yeah, nothing less than 6 months. Like 6 months out, debit spread. They're not too expensive, and you can really catch a big move with MicroStrategy. Not financial advice, by the way. So daily chart, it looks like it's trying to bottom out here. Trying to. Okay. I was gonna throw up Scotastics. Why can't I talk? Bro, I can't even say it. Stochastics. There we go. Stochastics. The stochastics are ripping higher. I like this. This is faster than RSI and MACD. The stochastics are saying buying pressure is picking up now. So I like that. I want to see this breakout though. We need to see MicroStrategy above. Let's call it 400. I mean, the real level here is what? We're looking at 395, 396. But, round numbers are always great. So once you start holding, if you close above 400, I think we break out for MSTR. Also, you're getting squeezed here. You can see the anchored VWAP from the low and from the high. We're squeezing like a Bollinger Band, right? Let's throw the Bollinger Band on. As a matter of fact, and I know that's a lot of stuff, so let's take it off. The Bollinger Band is showing us we're on the bottom, so we're kind of pulling back, right? It's almost like a slingshot. The slingshot is gaining, it's compounding. Once you get above blue, boom, you get that first push to the upper band. That's the signal, right? So a close above 400 is good, and then if you go to 415, that Bollinger Band is exploding. Should be moving higher. So I'm going to say 400 for MSTR. We're still holding on the weekly above the Bollinger Band. You can see on the weekly, once it pressed, it just boom. Now it's pulling back, starting to dip. Nice little curl. Looks good. All right. Tesla. Hold on. All right. So we got Tesla. I've been really trying to be patient here. Tesla is tricky. I'm going to wait till after the deliveries. We're under that Bollinger Band, but I'm going to wait for Tesla. I'm trying to be patient personally. I think the bottom, I don't want to say the bottom, but I want to see what it does right after the Austin presentation. I don't know if they're doing a presentation. I haven't been keeping up too much, but they're going to be doing the taxi, right? The autonomous taxis in Austin. So I think we always get a sell off in Tesla. I'm going to wait for it to sell off and then see if it catches some legs there. So what is it? 335-ish. And you never know, Tesla. It can come back down. But this is pretty much what we're looking at for Tesla. Let's take the Bollinger Band off. Don't want to see that. Let's put some anchored VWAP on the top. Okay, so we're trying to get above that anchored VWAP from the recent high, the local high. I want to see that hold. So we need to hold 3. I would like it at 300. Right, I missed it here. Should have got in. Missed it at 300. How's the momentum looking? Stochastics are moving up. MACD is trying to bottom out. Could be bottoming. Looks like we try to bottom here. You never know with Tesla. I think you just got to wait. What is it? June? Is it next week? I think it's next week. It's coming soon. Maybe 2 weeks. Could be 2 weeks. I don't know. So keep your eye on Tesla. Palantir does not give you a chance. This thing is going to roll over though. I've seen this so many times, and that's your opportunity. It's running out of momentum. It can only run up so far. It's already almost a 300 billion market cap. What are we sitting at? We're sitting at we are 325. Goodness. All right. So maybe you want to see us come down to, it's really hard to tell a Palantir. You just need 2 days of really, a lot of weakness. But you do have some support around 119. If you could catch it at 100, would be good. So yeah, Palantir is just it's a number 1 AI stock, like pure AI, pure software AI. Not really physical AI, but pure software AI. Yeah, that chart looks ugly. Let's look at some chips. Healthcare sector, Industrials, oh, we're gonna look at financials really quick. Yeah, let's look at the financials because they're gonna benefit the most from deregulation, and I count crypto as a financial sector. These little banks, I'm just gonna go through them. I don't really look at these. Not really interested in these little banks. Let's go to the weekly. Let's turn on the momentum and see what it looks like. I'm gonna take stochastics off real quick. Don't want to see that. Looks like they're bottoming. Looks like they're trying to bottom. PNC Bank, Zion. Nah, don't like it. Don't like it. These are just small banks. Here we got JP. Or no, these are big banks. Wait, what is JP Morgan? Why isn't that at the top? Okay, JP Morgan looks good. Bearish divergence is probably going to roll over. Never was a fan of these charts. Wells Fargo, Bank of America. Do you have anything? No? Okay. All right. Here's what I wanted to look at. Financial services, a firm. Okay. A firm is going to come back strong. It's starting to trend up. You can see the MACD starting to turn positive. Momentum phase. Got a nice clean trend here. Nice clean trend. I mean, if you get above trend, you're crushing it. So a firm looks good. It's in the midpoint. Wish I would have caught it on this trend, but it looks good. I like a firm. What's the market cap is 19 billion. So this is pressing a large cap already. That's considered it's considered a mid cap, but once you get over 20, you're a large cap. So it's sustainable. SQ oh man, underperformance. And you got to ask how much of this is just people shorting Kathy Wood's fund. 37 billion. This is a large cap. UPST, Upstart. Market cap is 4 billion. So this might have some legs. And deregulation is going to boom these. Yeah, because there's a lot of new stuff in financial industries. There's a lot of AI that's getting implemented that's going to pump margins. So Upstart looks good. PayPal, man, PayPal had a nasty fall. I didn't realize PayPal almost came back to the lows. Wow. Whoa. PayPal back to the 2017 lows. How sad is that? Could be a good buy, though. I don't do enough research on PayPal. SoFi, everybody loves SoFi. SoFi looks straight. They all look the same, right? They all look similar. They all look pretty similar. Now, when it comes to investment brokers, do we really want any of these? Schwab is like a good, value stock. I would call Schwab a cyclical value stock. KKR, Coinbase. I mean, Coinbase has potential. I mean, they can create so many services, and you got to ask, how is the US going to purchase Bitcoin? Are they going through Coinbase? Robinhood, obviously, that was my top pick back in 2023. Way back here was Robinhood. I wish I would have got more on it. I was just so invested in Chainlink, and it didn't perform. So I kind of messed up. I learned a lesson there, right? Maybe I should have been a little more diversified. Anyways, Robinhood is it's just you got to catch it when it gets crushed. It has a lot of momentum. What do you got for Robinhood? I mean, Robinhood is probably the best app too for beginners. The UI is good. The interface is good. You have margin. I mean, you guys probably know. A lot of you guys probably already know. Now a lot of people are looking at this too. Webull. They're trying to trade it. When it pops, it's gonna pop, but I don't know. I'm not sure. How good is Webull? What is their business model? What's the market cap here? We got a 4 billion market cap, tiny. I don't know. It IPO'd, and we'll see. We'll see. But if it breaks, it's gonna break out. Regional banks, not interested. I would just look at what is it? The regional banks stock. I can't even remember what it's called. So these are financials. Now these are going to be interesting. These insurance stocks. This is Root Insurance. Okay, I used them for a long time, and then I was like, no more. I'm gonna switch it up. Car insurance got too expensive. But Root is a small cap, I believe. What are we looking at? 2 billion. Yeah. Keep your eye on this, Root Insurance. These are really good because they're integrating a lot of tech, AI into their stuff. And there's just so much to do in insurance. There's so much opportunity, and it's a small cap. I've used them. They're pretty good. It's an easy service. It's really easy to use them. User friendly. You also have Lemonade insurance. I like this one. I got to do more research on the financials, but I use this. Very simple. You get everything done. It's just they're smaller caps. They're more user friendly. The millennials are more likely to use them over time. Deregulation is really going to help. So I like Lemonade too. Allstate, it looks like trash. Too big. So those are financials. I went over a lot of stuff here. Healthcare, high beta, anything interesting. Consumer staples. You know what? Consumer discretionary is something I always miss. These are interesting. These are businesses that everybody knows about too. Alibaba, Melee, never used it. Lululemon. Okay, great. I like this. Lululemon getting crushed. I want to know why they're getting crushed, but I would definitely take a look at Lululemon. They still have a strong brand. I mean, that thing is oversold. It's not done bottoming out, but take a look at Lululemon. Put that on your watch list. I would like to put that on there. Yeah, Lululemon. Let's see if it holds these. What is this? 250. Market cap is 29 billion. Pretty big stock now. Consumer discretionary. Chewy. Oh man, this thing looks good. People are still buying dogs. Cat food, dog food. Chewy looks good technically. I really like Chewy. Let's see that RSI and the weekly. Okay. Starting to turn up. Chewy looks good. Nike, not a fan of the stock, honestly. I think they're getting disrupted. TJX. I mean, everybody goes to Ross, especially for summer shopping. So I wouldn't trade it though. I wouldn't mess with them. I'm just taking a look at some of these. DPC, Shake Shack. Maybe I'll get some Shake Shack today. Treat myself to a cheat meal. You guys, you guys, any of you guys out there on a diet, hitting the gym? Get you some electrolytes. It's hot. DK&G. Somebody was asking me about this. It looks okay. It looks good. I'm not big in the consumer stocks. You know who looks good though? Okay, we're gonna end here. This is who looks good. These housing stocks. Everybody's bearish on them because of the housing market, but I think they're gonna start bottoming out. Now, Lowe's. Am I interested in Lowe's? Not really. What's our market cap here? I want to see how much can this move. I'm not sure. 120 billion. Big stock. Could be good to own. Does it have a yield on it? 2% yield. Whatever. Everybody's going to use Lowe's. Home Depot, whatever. Yeah, great. Airbnb. Does it have potential? I don't know. I'm not a fan. A lot of people love it. I'm not a big fan of Airbnbs. I'm biased though. Could be a great stock. Who is this? Borg Warner. Not sure who that is. Okay, DH Horton. Okay, these technicals look good. Posted this on the chat the other day. We're holding 107. I think these are going to start turning up. DH Horton, Home Builders, Lennard. They look like they want to bottom. That RSI looks really good. Okay, it is bullish divergence. Okay, you got bullish divergence is at the bottom on the weekly. This could be a good trade. 110 to at least back to anchored VWAP to 130. But I mean, you're really holding it until 2026 when those rates come down, and they should be turning back up. I think they're bottoming out. Shelter bottoming out for sure. KB Home, same thing. And then Toll Brothers, same thing. They all look good. On a technical basis, they look good. I think that's all I have to really look at here. There's so many stocks to look at. There's a lot of stocks to look at. QQQ, almost at all-time highs. We're getting close. Yeah, we're getting close. I wouldn't be too worried. I think we're going to pull back. We're going to, I'm going to say end of June. So what do we got looking forward? Let's go ahead and transition to what do we have next week? What are going to be our catalysts for next week? Let's go to our economic calendar. Now, keep in mind, our biggest catalyst here is going to be, get out of my way. Where is it? Is it on this screen? Damn it. Lost it. There it is. Okay. So our biggest catalyst is obviously going to be, can we get the Stablecoin Act passed? And really the Genius Act, those are two separate things. But the Genius Act is going to be key for crypto. Altcoin season is going to blast off. I think those are going to be our biggest gains because this is a new industry, right? And I could be wrong. Maybe something else. Maybe robotics do more. But I'm really looking forward to altcoins. Next week, we have, what is the 13th? So next week, we're looking at New York Empire Manufacturing. Irrelevant. Nobody cares. Not that important. Retail sales are huge. We want to see, are we going negative? Okay. If retail sales, what's our expectation? Negative. Our expectation is negative already. So that's kind of good. If we come in positive, we're still decelerating, no inflation, but the Fed is going to be thinking more dovish going into that report. Year over year is very strong, though. Year over year is expected coming out. Oh, there's no expectation yet. So this is why we're not having a recession. Retail sales are a big part of the economy. No recession there. There's no evidence. And then we get NAHB housing market data. This is slowing. Housing market looks crazy. I mean, Phoenix prices are coming down like crazy. Industrial production. Here we go. This one looks strong. We haven't seen this for a long time. We haven't seen industrial production really pick up since. Let's see. I mean, everything was a deceleration. I feel like we're looking like 2017 before the tax cuts, right? You come up, you kind of come down, boom, starts to roll up. So this, and a lot of this is businesses, just a lot of industrial, movement and activity when it comes to data centers and build out for nuclear, for AI. It's the AI trade. It's the freaking AI trade, still strong. That's why we're not having a recession. Housing market still trash. And then boom, we get the Fed. We get the Fed next Wednesday. That's our big catalyst. Retail sales, and then the Fed. What are they going to do? Well, they're probably going to hold rates, but we want to hear their tone. I will be streaming live, obviously, to see, does the Fed give us anything new? Right? Does the Fed give us anything new? So again, oh man, Cooler technology got destroyed. What happened to Cooler? I'm keeping my eye on this thing. This is a this is a micro cap. They have a lot of Bitcoin. Something happened to them. 78 cents. What the hell? Will execute a 1-for-8 reverse stock split June 23rd. Okay. Reverse stock split. Reducing shares 300 million to under 40 million while keeping the per value at 1 cent. Okay, so they're going to do a reverse stock split. That's usually not great news. They're reducing the share count, though. Yeah, I wonder why they're doing that. That doesn't sound too great. Guess we'll find out. I'm still keeping my eye on OPTT also as a small cap or a micro cap. Ocean Wave Technology. We just need, we need the risk appetite to really come back. It's trying to break out. It's not doing it. These are my small cap plays. I just stay patient. I think we really got to stay patient here, but I'm going to keep telling you guys, Link USD, you really want to be exposed to this. Out of all the other stuff, maybe it underperforms. I know a lot of people are disappointed. They're like, Jeremy, it never performed. It's coming. Just wait. That stable coin, the Genius Act is huge. It is all about the Genius Act. When we pass the Genius Act, it basically rips open tokenization of all real world assets. It opens up crypto into the mainstream. It makes it legal. Now we have banks, they're going to merge their blockchains. They need Chainlink, CCIP. They need proof of reserves to basically to have clear regulation. This is the tech. This is like the internet. This is like owning the real internet. Bitcoin is not. Bitcoin is like gold. Ethereum is like Amazon AWS, and then kind of the internet. But Link is the thing that, Chainlink is what merges these things all together. So stay patient, be patient, right? Don't go all in, just be patient. Be patient. It is coming. Do a little TA on here. See what we're looking at, right? So we almost crossed over this. We got close for a MACD crossover. Now we're coming down again, but when this thing moves, it's going to move. So anyways, we're looking at oil. We don't want to see oil get above $80. Look for rates staying below 4.5. So far, good, so good. There's a risk appetite in the market. We're waiting for those damn bills. Hopefully, we get another trade deal. I appreciate you guys, and we'll catch you on the next one. I'll throw out my shorts. You guys stay blessed, work out, eat healthy, try to stay positive, get some sleep, recover. Catch you guys next time. Thank you.